As far as Bitcoin goes, well, that's just kind of another question altogether. As much as I want it to be and believe it should be a safe haven, I do believe it's a safe haven long term. In the next year, I can't say that I believe that this is going to be the ultimate safe haven in the next 2 months, 6 months. I don't know. It's still very volatile. There's just not enough money in it yet. So what does this ETF do? Well, it translates Bitcoin into the securities language that they already know and speak, and they do business in every day.
James Lavish, the managing partner at Bitcoin Opportunity, is examining the impact that heightened geopolitical tensions resulting from the Israel-Hamas conflict may have on both the gold and Bitcoin markets, especially following recent rallies in these assets. Recently, geopolitical crisis broke between Israel and Palestine around October 7, 2023. And similar to COVID-19 and Russian versus Ukraine war data trends, both gold and Bitcoin have made substantial gains, setting the crypto and commodities markets recovery in motion. Between October 7th and October 24th, Bitcoin price has scored 27% gains, moving from $27,200 to a yearly peak of $34,500. While gold gains are only just approaching the 10% mark. This also prompted a surge in gold prices as traders sought safe haven assets, pushing gold near the $2,000 mark. As the anticipation of the Federal Reserve hiking rates and maintaining them, coupled with falling U.S. government bond prices, James believes that gold will stay a trusted safe choice for the near future. On the other hand, when it comes to Bitcoin, while he hopes and thinks it should be a long-term safe option, he can't be sure it will become the ultimate choice in the next few months or even a year. With the economy currently facing high inflation and a sharp decline in the yield curve, there is a strong indication that a recession may be imminent. In the interview, James mentioned that a recession as severe as the Great Depression, with a 10% to 15% rise in unemployment, would significantly harm all assets. Now, let's shift our focus to a video. Before we get started, make sure to subscribe to the channel and click the bell icon for the latest updates.
You do see that flight to safety with gold. And in particular, you've seen that ever since this crisis broke out, or this war broke out, you could see gold kind of sniff out the fact that there's so much uncertainty that this asset that's been around for thousands of years is a place to hide in that time of uncertainty. And so it was interesting to see gold going up at the same time that Treasury yields were going up, right? And so it's unusual for that to happen at the same time that the US dollar is going up. So there's a confluence of factors here. And so I believe that gold is a good safe haven for at least the next number of years as this uncertainty and the Fed printing money plays out. As far as Bitcoin goes, well, that's just kind of another question altogether. As much as I want it to be and believe it should be a safe haven, I do believe it's a safe haven long term. In the next year, I can't say that I believe that this is going to be the ultimate safe haven in the next 2 months, 6 months. I don't know. It's still very volatile. There's just not enough money in it yet. I do believe it will get there. Ultimately, it will be the ultimate safe haven, and it will be the ultimate asset to hedge yourself against massive money printing. But I do believe today what we're seeing is not unreasonable speculation or exuberance around the probability that there's a spot ETF that's approved soon, whether it's by the end of the year or early next year. We're talking 10, 12 weeks that people are starting to expect that that in and of itself is a major driver of assets to this asset. So people will be moving out of certain things, long bonds, and into something like Bitcoin as this becomes a separate class of an asset class. If we have a recession that's deep enough that your unemployment jumps over 10, 15%, like if we have something that would be like Great Depression kind of event, that would absolutely weigh on every asset. So whether it's Bitcoin or it's stocks, it would be difficult to that would be a very difficult environment to make money in,
All right.
truthfully.
BlackRock is moving forward with the process of bringing its spot Bitcoin exchange-traded fund to market. Investment powerhouse BlackRock is making strides in its quest to introduce an iShares spot Bitcoin exchange-traded fund. Recent developments indicate the firm's proposal might be inching closer to getting a nod from the United States Securities and Exchange Commission. James' recent tweet stated, "The spot Bitcoin ETF will be like a superhighway on-ramp for many institutional investors." It translates Bitcoin into the securities language they already know and speak and do business in every day. A research report released by JP Morgan indicated SEC will approve spot Bitcoin ETFs before January 10th. Is it a realistic timeline? Let's hear what James Lavish has to say about this.
I think it's a realistic timeline. And in reality, Gary Gensler hasn't really had, in my mind, he hasn't had reasonable, defense for not allowing the spot Bitcoin ETF to be approved to this date. And so, but when you have large, massive players who have between the two of them, tens of trillions of dollars of assets between BlackRock and Fidelity, it's tremendous pressure on them all to figure it out, because it's saying that the people want this, investors want this, they want this easy version of Bitcoin for them to be able to buy and sell in their portfolios. And why it's so important is, I've talked about this before, is that, look, it's very difficult for small institutions and even some large institutions to buy and own Bitcoin. It's a very large, it's a tall hurdle for them to get over in their own operations, right? Because there are legal issues, there are settlement issues, you've got who's going to custody the Bitcoin, where's it going to trade, how are they going to market? There's a lot of issues they have to work out. And it's easy for you or me to just go into Coinbase, buy some, put it in a wallet, no problem. But for the institution, it's much, much, much more problematic, and it's a larger question for them. So what does this ETF do? Well, it translates Bitcoin into the securities language that they already know and speak, and they do business in every day. They can buy it on the New York Stock Exchange. They can settle it on the New York Stock Exchange. They can have their prime broker custody it, and they can margin against it if they need to with cash. And it's all right there. There's no difference between that and owning a spider for them. And so that's what's important. And so that in and of itself will bring, in my opinion, a tremendous amount of liquidity into this asset. It becomes so easy to buy. What we saw last week, when there was a rumor that BlackRock's ETF had been approved, and you saw Bitcoin just jump in price, it was about 10%, I think, in a matter of minutes, right? So that in and of itself is an indication that there's pent-up demand for this, and they know it. And so even if a lot of that was short covering, it shows that we know that this is news that everybody's waiting on. I do not believe that this news is priced into the Bitcoin market yet. It's starting to get priced in today, as you saw, and I believe it will continue to do this. Of course, it's going to react to what's going on in the economy and market as well. It is still considered a risk asset for many holders. And so until we get through that period, it's hard to tell. But I do believe that once we have the 3 main or 4 main ETFs approved, that the spot ETFs approved, that there's going to the market value of Bitcoin could double very quickly. And I don't think that would not be a surprise to me at all. It would actually surprise me if we don't double, or at least have some sort of major 50, 60, 70% move on the actual approval of a number of those.
The United States Federal Reserve is currently grappling with ongoing inflation, despite which they've decided to pause interest rate hikes. This situation is setting the stage for a potential bear steepener in the economy. Investors seeking safety may look beyond long-term U.S. Treasury bonds. As a result, assets like gold and, notably, Bitcoin are expected to rise as genuine concerns about global wartime inflation take hold. That concludes our conversation for today. Feel free to share your thoughts in the comment section below. If you found this content informative, please consider giving it a thumbs up and subscribing for the latest updates. Thank you for being here with us.